that will be alarming to somebody like China, who holds over $1 trillion in US Treasuries and may see that action as a forecast of the US government's ability to essentially just turn off $1 trillion of their foreign reserve assets.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Alex Scanlon. He's the managing director and CEO of Barton Gold. Before we go further, I'd just like to say this is not a sponsored video. I'm just chatting with Alex. I met him in Zurich at the Precious Metals Summit conference. We had a one-to-one meeting, and we decided to keep in touch. And Alex, welcome to the channel.
Yeah, thank you for having me.
What do you think is the most important macro situation right now in terms of the dollar, the Federal Reserve? Where do you see things going right now?
I think it's a very good question. I think kind of attendant to that question, there's sort of multiple different strands or key themes that are going on. One thing which I know that you've spoken about and which is probably not getting as much attention as I think it should is US Treasury liquidity or lack thereof. If we consider the gold price and sort of the spoken distress that people have about why is gold not performing, why is gold not rocketing while equities prices are declining and risk is going up. First, I think we know that, well, by comparison, if you look at gold relative to indices, gold is performing because it is preserving your wealth. It is retaining its value, even if it is not, skyrocketing. It's not meant to do that, though I do think we're on the front end of a significant revaluation of gold that reflects a number of these large-scale macro theses. But one reason why gold is not in people's minds moving aggressively to the upside is that people tend to use a reference currency of the US dollar. And the US dollar being essentially, since the creation of the International Monetary Fund and the World Bank, essentially the global reserve currency against which all commodities are priced, it's very hard for a commodity to perform well in a high risk situation where people are actually buying dollars and strengthening that. The interesting point in coming back to the issue of US Treasuries is the US dollar only holds its reserve status because it is deemed to be essentially as good as gold, backed by the best, backed by the strongest, and in particular backed by liquidity, replaceability of that capital. When the US Treasury market becomes less liquid, imagine a situation where the US Treasury market would go zero bid overnight, as happened to the British pound last month. Imagine the chaos that would happen in global currency, commodity rates, credit markets, if the US government or if the flow of US Treasuries was in any way interrupted, or there were not adequate bidders for this incredibly large and ever-growing mountain of US dollar denominated treasuries or US dollar denominated debt held by the theoretically most creditworthy enterprise in the world. I really think that is sort of a canary in the coal mine. It's probably 10 canaries in the coal mine, and half of them are already dead. I think it signals a lot of trouble in financial markets.
Yeah, and we've seen recently as well, I think today as well, the Bank of, there's a story out that the Japanese are continuing to sell treasuries. And I noticed that, I haven't looked at it recently, the dollar is dropping over 1% against the yen. I know it's Thanksgiving, but the FX markets, they trade mostly in London actually. So I think that's impacting also liquidity in treasuries, and the fact that the Fed is saying they're doing QT. They've done about 400 billion. And do you see also the geopolitical situation, like with Ukraine? You get countries like China, they must be thinking, well, we have to make sure we don't load up too much on treasuries and maybe even buy some gold.
Yeah, look, I think that is quite a salient point. If we look across let's say the recent history of U.S. Treasury holdings of either major political counterparties or major economic counterparties, in the current environment of increased geopolitical tension, I think it's sort of, the question is which came first, chicken or the egg. But what we are now seeing, and what a lot of people are attributing to current global events in terms of U.S. Treasury destocking, is really a process that started close to 8 years ago with some of the largest holders of U.S. Treasuries, and those were chiefly Russia and China as very good examples in the question of the geopolitical contest that we now have. Starting in 2014, Russia began one of the most aggressive gold deposit building campaigns ever. They were disposing of U.S. Treasuries and disposing of other real assets or other foreign exchange assets and stockpiling gold. No doubt with some idea in mind that having just annexed Crimea, the next play was going to be much bigger, and they needed to essentially sanction-proof themselves. So I think the numbers are that they went from somewhere around 2% of global gold reserves in terms of sovereign gold reserves to about 7%. And so to increase 5% of the global sovereign reserve holdings in a period of 5 or 6 years is a phenomenal effort. They would have been selling a lot of U.S. Treasuries to do that. We also saw China around this time start to slow down, if you will, its acquisition of U.S. Treasuries. And these peaked around 1.4 trillion and have now sold off quite heavily. So over the past several years, they're down now to about $1 trillion. And doubtless, they will be looking at the events that are very specifically related to Russia and Ukraine and saying, okay, we as a nation have risen far beyond the boundaries within which the world saw us in the 1980s and the 1990s. Throughout the 1990s and early 2000s, we had a internal development policy and internal development strategy. And around 2000 and I should say the late 2000s, they really embraced their go out policy. And that go out policy was ostensibly a diplomatic go out policy, but in reality, it also meant go out and sort of stretch your influence in the world. So in the modern contextual setting where Russia has overstepped bounds that the international community has declared are, fair game, and the U.S. government has essentially just turned off $300 million of U.S. dollars, that will be alarming to somebody like China, who holds over $1 trillion in U.S. Treasuries, and may see that action as a forecast of the U.S. government's ability to essentially just turn off $1 trillion of their foreign reserve assets. So that's a very long answer, but in reality, what we see currently has been shaping up for a very, very long time, and I think it will continue to be a real dilemma. I think it will weigh heavily on U.S. Treasury liquidity and new issuances, which of course will affect the liquidity of existing stock. And it will be something to watch with a cautious eye going forward.
Yes, and it's funny you're talking about the reserves, and I just remembered something about West Germany, it was called at the time in the 60s, and especially in the 70s, after the Americans closed the gold window, they had a huge surplus. And what they did with their dollars, not to basically piss off the Americans, they recycled it into new projects in other countries, like building, Volkswagen building plants in emerging market countries. And it reminds me of what China is doing these days, going into other continents like Africa and also South America, and also building this One Belt this new Silk Road. It seems like
Mhm.
it's a good way of getting rid of the dollars, but not being too political.
Yeah.
Mm.
No, that's a very good point. I mean, if there is one benefit of the dollar, is that it is accepted everywhere. So if you are trying to get rid of these dollars, certainly going out across South Asia, across North Africa, as China has done with its One Belt, One Road initiative, if you're showing up with the U.S. dollars, you will find a lot of ready takers for that currency. That paper that maybe you want to de-risk. And they have done a huge amount of investment across the One Belt, One Road, essentially the new Silk Road.
Okay.
That has culminated in them having their first overseas military base, adjacent to their significant overseas owned energy supply in Djibouti.
Yeah.
So certainly, really, as part of that Go Out policy and part of that One Belt, One Road initiative, they will be using those dollars as quickly as they probably can.
One thing you might be able to answer, and something that's a bit puzzling, but at the same time not. How come countries like the UK, Australia, and Canada, how come they're not adding to their gold reserves? You've got Canada has zero, zero gold reserves, and this is, I'm not doing this as a Illuminati. Okay, people quote I went that just because it means zero, and Australia only has like 80 tons, and most of it is in at the Bank of England. Uh, do you think that's more to do with the dollar system, that they're part of the Five Eyes and they're just trying to not rattle, like rattle, disturb the dollar system? Do you think eventually Australia, Canada, and UK will have to add on to their gold reserves? I mean, the latest number from the World Gold Council, they put like 399 tons or 300 tons there, but they couldn't say who it was from. Maybe
Yeah.
maybe the UK might be starting to buy some gold. Who knows?
Yeah, I think I would be quite surprised if it was the UK that had done that. I think more likely the indications are that it would be strategic buyers like China, for
Yeah,
example, who do make an effort to buy off exchange so that it doesn't A, push the price, and B, kind of reveal the long-term strategy that they are playing around their treasury strategy. But when you consider the question of why, and this applies equally to the United States, why are its gold reserves so low relative to its money supply is really the full nature of the question. I think we're dealing with a fair answer that is approximately something like hubris, right? The U.S. has been so strong for so long. The U.S. dollar has been the undefeated champion of currency markets for so long that they don't really feel the need to actually have enough gold, or to move their gold reserves in some kind of ratio with the printed money supply. I think the UK has long felt themselves to be very central to global financial markets. They would have disposed of their gold as a balance sheet exercise, as a liquidity exercise at some point. And I think what we are seeing in particular in relation to the UK, and I mentioned briefly that the overnight crash in the pound versus the dollar, and we saw essentially a crash in the gilts market. We're seeing right now the unhappy consequences of Brexit, and that really was a sort of a hubristic exercise of we will do what we want to do, and we'll tell you how it will be. And the UK has been in a position of sort of moral authority and power for a very long time. I think that has changed dramatically. We are watching a very interesting, slightly dangerous social experiment. Um, and I'm sure the UK would much rather, now that they have much more significant gold reserves than they do. In Australia, that is one that I've heard the question before, and it really does strike me that one of the largest gold producers in the world has essentially no gold reserves to speak of relative to A, its production, or B, its own increasing participation in global markets. I think one thing when you look at Australia, so one, they disposed of all their gold at the, sort of long-term low historical gold prices. So it was a perfectly poorly timed exit from their gold holdings. But there may be a sense, if you will, that, well, we have so much gold in the ground anyway, that, hey, if we need gold reserves, we'll just get it. We'll get them out of the ground. We'll buy these assets, or we'll make sure the gold stays in the country. The failure in that thinking lies not with the simple fact that indeed Australia has enormous gold resources, but it takes a very long time to get them out of the ground. It takes 10, 20, 30 years sometimes to find major gold deposits, to advance these to development stage, and then to actually operate them and extract the gold. So if you are in a situation where you do urgently require gold reserves, saying we have them in the ground is not adequate, because it will take you 10 years to high speed those out of the ground. I think that all three of these countries need to be thinking quite carefully about their gold reserve practices. I think where we are today is a function of short-sighted political thinking, and I without wanting to sling too much mud around here, is one thing I like to say is that you and I might be worried about what happens to our savings over the next 10 and 20 and 30 years. Politicians have a 2-year re-election incentive, right? Power is their interest. Whether a particular politician or group of politicians may actually have good intentions, they fundamentally are campaigning 24/7, and getting elected again means short-term decisions, and that means doing things that I think quite self-evidently are not often in long-term interest.
You were talking about how long it can potentially take to explore for the gold, do all the studies, and then eventually get up and running and producing. Maybe we can talk a little bit about Barton Gold, and after Barton Gold, we'll finish off with the FTX and cryptocurrencies.
Yeah, look, well, I guess, on the point there, as we've discussed about the duration of time it takes, often it will be the third, fourth, fifth, or sixth holder of an asset or collection of assets that will turn it into something significant. In the case of Barton Gold, the company that I run, we were really looking at the world from a macroeconomic sort of monetary policy, credit risk, and geopolitical risk perspective back in the end of 2016 and 2017. And from a very high level perspective, we were already looking at corporate, consumer, and sovereign credit situation, which was far worse than the outset of the GFC. We were already in a dire monetary policy situation where governments had Western governments, if you will, had printed money essentially relentlessly, and since the start of the GFC had really trialed this sort of free money policy to do as they would, and essentially buy in nominal dollars the success that they saw as desirable to political outcomes. And then we had sort of two sort of seismic events in global geopolitics, and that was one, the election of Donald Trump in the United States to president of the United States, and then of course Brexit, which we referenced. And we can set aside politics, right? Whatever your political views may be, we can set these aside and say, well, regardless of any one person's specific views, these were two political events that were essentially predicated on separatism, renationalization, raising border walls, separating economies and trade alliances that had been tied together for a long time. So if you're worried about a potential inflationary setup with bad credit and loose monetary policy, the imposition of friction at borders, whether it be people, ideas, money, certainly in the form of tariffs, that's a sort of a guaranteed inflation kicker. So we started looking at where can we acquire very large scale proven gold assets in a tier one mining and legal jurisdiction, and ideally those that we think can be accelerated into large scale development. Now, as it happens, I live in Australia. We were very familiar with the markets, and we were looking at Western Australia, which is one of the standard go-to places. We were looking at Queensland, and we focused on South Australia. We settled on South Australia for a few reasons. One, the Central Gawler Craton in South Australia is actually a globally recognized geological domain. So this is the Gawler Craton, the very same one that holds Prominent Hill, Olympic Dam, Karapatina. So these are BHP and Oz Minerals assets, which of course quite recently now will be merged. But this is sort of an IOCG belt right in the center of the Gawler Craton. The state of South Australia itself is about 50% of the landmass is the Gawler Craton. So this is a phenomenally interesting geological state. And then when we look in the center of the Gawler Craton, there is actually a gold province there called the Central Gawler Gold Province. And there's essentially been two gold rushes there in the past 140 years. That the last real focus in that area was in the mid to late 90s. And since that time, when the gold price crashed and essentially cratered gold exploration and investment in really global markets, but certainly in Australia, there's been no modern exploration. So we saw an opportunity to consolidate essentially this entire district, which we've done. So the state is very well mineralized for gold, very underrepresented for gold production. We've consolidated, and you've got these slides up here. We've consolidated essentially the bookends of this district and substantially the majority of all historical producing and exploration ground. So in the northwest in our asset package, we have the Central Gawler Mill. It is the only gold mill in the region, and we are surrounded by a number of explorers that have assets that might otherwise be stranded or subscale and not able to support building their own mill. And adjacent to that mill, we also have the Challenger underground mine. So that mine produced about 1.2 million ounces of gold between 2002 and 2018. So very much proven geology. At the other end of our asset package, we have our Tunkillia assets. And so this, like Challenger, was an asset that was actually discovered at the end of 1995 or early 1996. So the sort of dual discovery of these assets in about a 6-month window of time set off a huge amount of interest in South Australian gold exploration just in time for the gold market to crash in 1997. So we've acquired those assets. We've also acquired Tarcoola. Now, Tarcoola, which is between the two, was actually the home of the South Australian gold rush in 1893. So on our mining lease there, and Tarcoola is where you actually had the old timers, if you will, during the late 1800s and early 1900s, mining gold at over 1 ounce per ton from surface, from sort of outcropping quartz veins. Wrapping this all together, we have essentially a proven gold district that just hasn't had modern work. So we've actually brought in a lot of new modern technology to see through cover, whether that be 2 or 4 or 10 meters of cover. We've done a huge amount since we listed. We IPO'd last year in June on the Australian Securities Exchange. In that time, we found 4 new gold zones for almost 2 kilometers, actually over 2 kilometers of new mineralization. So we've almost doubled the gold mineralized strike in this region just from a few specific drilling programs. We are also somewhat unique in the gold exploration space in that we have sources of income, and that's because we have a very large asset platform. And a lot of these assets are actually surplus to our requirements. And in a current inflationary environment, these assets, be they spare parts and equipment, surplus village and camp assets, they're actually very, very valuable and hard to obtain. So we're able to sell these for more than they were worth new 10 and 12 years ago. So we have those sources of income. We've got a lot of support from the South Australian government. And our view here, our vision, is to essentially continue to grow these resources, not to rush that mill back into operation, but to focus on a bigger picture delineation, targeting north of 2 million ounces as our clear runway for commencement of operations. And the objective is to be producing north of 150,000 ounces per annum, which would make us South Australia's largest gold producer. Now, as we move toward that, we certainly can and will pull forward a sort of set of stage one operations. And that would allow us to use, for example, the high-grade open pit mineralization we have at the Tarcoola project and feed our existing mill at the Central Gawler mill. And that's how those assets were working together in 2017 and 2018 with the Tarcoola open pit mines feeding that mill. So we have a nice, a very strong platform, essentially, where we are today. We have 1.1 million ounces and a gold mill. That's usually the end objective for most gold developers. That's very much our starting point. We're growing rapidly. We're very well capitalized. And importantly, as we have discussed as well, and as I know you've emphasized in other videos, we have an exceptional team. So we've got over 200 years of project exploration, financing, development, and operations in our team in terms of experience. And actually 3 of our leadership team are formerly of Normandy Mining, which was Australia's largest gold producer until its acquisition by Newmont Mining in 2002. So this was a company producing over 2 million ounces of gold per annum. So this is the team that we've put together, and it really reflects our sort of forward view, forward planning, and forward ambition in some sense, in a very real sense. We're actually not a gold explorer. We are an advanced asset manager that is focused on growing the known mineralization that we have, and then just starting a much larger operation. And that's the difference between developing a $300 million company or developing a $3 billion company.
Great. So yeah, if the viewers want to check out this stock, it trades on the Australian Securities Exchange. What's the ticker symbol, Alex, again?
It's BGD.
Great. And so maybe we could wrap up and look. You spoke about hubris earlier, about the UK and politicians. So maybe we could move into FTX and what's going on, and what your opinion is, and how it could affect investors' appetite, let's say, for gold and silver.
Yeah, look, I think this situation reminds me of any number of interesting books, the smartest guys in the room and all of these things. But there's been a lot of debate for years about what is crypto, what does it represent, what is the potential of it. I think it's not nice to see current events, but it is a validation for those of us who've been raising the flag, the yellow flag, and indeed the red flag on a lot of these things for a long time. I think the FTX situation is a combination not only of something that is, in terms of inventing money, is sort of a classic Ponzi scheme wrapped up with monopoly money, but that, more than that, this was something that has all of the questions that remain unanswered or unproven around crypto themselves, wrapped around essentially a complete failure of common sense governance. Indeed, a lot of people are supposed to be the smartest people in the room in terms of professional investors were, racing each other to throw enormous sums of money at this enterprise. And based on the kind of information that's come out of FTX under its new leadership and its bankruptcy filing, it really seems as though people were writing $200 million checks while doing absolutely no due diligence, which a basic degree of due diligence would have identified a huge number of problems that signaled that this was actually just a fraud, a clear fraud on investors and depositors, right?
Yeah, and I just wanted to show you something because I don't know if you've seen this story. Let's pull it up here. because SBF was supposed to be attending this New York Times event, and that after it collapsed, FTX, we were told, oh, he's not going to go anymore. But it looks like they're still inviting him. So it's it's pretty outrageous, I think. House of outrage after New York Times confirms SBF to speak alongside Zelensky and Yellen. I mean, that can't help the credibility of the U.S. Treasury for Yellen to be associated with this guy, especially after what happened. I find it amazing that they're going ahead and inviting him. And this guy here, Andrew Sorkin, says, yeah, enough. He's going to interview him. That's how tough they're going to be on him. We saw what happened to, I don't know if you remember, Nick Leeson for Barings. That was fraud, and he went to jail for it.
Yeah.
What's his name? Bernie Madoff went to jail for it. This guy, he's still hobnobbing around with heads of state, even though it's Zelensky and the Secretary of the U.S. Treasury. And I think the BlackRock CEO, Larry Fink, is going to be there as well. It just seems like a crazy world for me. And it just seems that it makes having a little bit of gold and silver becomes even more attractive.
Yeah, look, I would be blown away if they still allow him to be on stage. But is it surprising? Yes. Is it shocking? Yeah. Outrageous? Yeah. Could it still happen? Absolutely. And we see just absolutely insane thing happening in our world every day. What's interesting is that you gave some very good, examples about, well-known frauds, Nick Leeson being one and Madoff another. It is still very early days in the process of unwinding what's happening. And I do suspect, the stunning speed of the collapse of FTX. I mean, we're, 2 weeks out from this having happened, essentially. If and the more that Sam Bankman-Fried continues to speak and say and do things in public, I do think he's essentially just sealing his fate. He seems to have already said things that would sort of seem an admission of very substantial crimes, as has his chief financial officer. They both seem to have been making public statements that I'm sure their attorneys are screaming at them to keep their mouths closed and stop talking. I don't know. I really hope they don't give this guy a continued platform. But we have been celebrating in modern society hubris, graft. We live in the golden age of fraud, where everybody wants to be seen to be rich, and everyone's living up to their eyeballs in debt. I mean, we are in such an upside down world right now. Who knows where this goes? But I certainly would imagine that Sam Bankman-Fried and his inner cohort are all going to jail at some point. The more they speak publicly, the faster I think that happens.
And it's amazing how, like the old French saying, that the more things change, the more they become the same. Because people like Isaac Newton, he lost almost his whole fortune during the South Sea Bubble event in 1720. And they even had the altcoins of the day. They were called the bubbles. So to wrap up, Alex, just wanted to thank you for coming on the channel and talking to us. And hopefully we'll talk again. And I wish you all the best with Barton Gold too.
Oh, thank you very much. It's been a pleasure.